Simeon, great to see you this morning. I mean, we just heard it from Court. These were ugly quarters for both Nordstrom and Gap. I know you follow both of these names. Buying opportunities here, or is this wait and see?
Hey, great to be back, and love Court's lead-in. We'll get some discounts this season. No, I think that the reality is we're finding that there's winners and losers. I think that what we're finding is we've been grouping all of retail together through the pandemic, but at the end of the day, even if you subscribe to the belief that we very much do, that the pandemic gave retailers an opportunity to refashion their businesses, you have to actually take that opportunity. And I think what we're going to find for next year, certain companies saw improved pricing power, and certain companies just saw better prices because of inventory scarcity. But what we all know, I mean, all the times you and I talk about this, inventory promotions will come back. And the question is, who shows the ability to hold the line when that happens? And we're getting a first glimpse into that picture. So I think there's going to be a lot of retailers worth buying. I think right now, this feels like a catching knife, a falling knife.
So if it's a falling knife, then is it too soon to say what the winners and losers are? I mean, just looking at your coverage here, you do have a handful of buy ratings. I mean, are there opportunities right now in this broader downdraft we've been seeing?
And I think every day changes the world. Last week, this was the most amazing retail earnings cycle we've seen in forever, right? Like the stocks just kept going up. I think if you look at the two that reported that we're talking about now, Gap and Nordstrom, on a two-year basis, their operating profit dollars, forget about rates, forget about relativity, their dollars are lower than they were 2 years ago. That's not the case for almost the entirety of retail. So I think when you think about that, you look at a Capri, you look at a Victoria's Secret, you can find businesses that actually change their business for the better. And they're still cheap. But I think that there are these businesses where if you can find businesses that did more with less, right, that realized that chasing promotions was not good for chasing profits, those are businesses that are going to be better situated. I mean, if you think about it, a store that made it through COVID is probably a much healthier store than it was before the pandemic. So I think there's actually a nice amount of opportunities across retail. And I think what you want to find is you want to figure out from a dollar basis whose profits went up and whose profits are going down. Because if your profits are going down now, in an environment where you had stimulus giving you capacity to spend, you had pent-up demand giving you desire to spend, and we've all heard about the supply chain raising the price on what you're spending on. Well, what happens next year when you lapse stimulus, when leaving the house becomes routine, not exciting, and when supply chain, when all of a sudden those red sweaters that were stuck in the port make their way to the floors in February? Like, the environment's going to get harder, and there's certain companies that are going to emerge stronger, and there's certain companies that are going to have to go back to regular discounting. And I think that's what we're starting to see at the beginning. And if you can figure out that idea, I mean, that's where you'll get the winners and losers. And we're getting our first look at 22's version of that story today.
I mean, it's such a key point that you make, and it speaks to the fact that there is such focus from investors in Wall Street right now on margins when it comes to the retailers. And even if you beat on top and bottom lines for the quarter, if you saw any kind of pressure on margins, I mean, what you're saying right now speaks to that. So as we start to see more normalization, dare I say, going into 2022, and perhaps more of a shift from goods to services, which is the thing I feel like economists have been talking about, we haven't actually seen materialize in the data. At some point, it probably will. What does that do to the entire group, that normalization process, looking out into next year?
It's a great point. I've given up on like new normals. We're the current normal, right? It's like whatever today brings is the new reality.
Fair.
I think it's a great point, right? I think we are going to see the instance where people will shop, whether they return fully back to experiences or not. I don't think I necessarily go with that. I think we are finding that people wanted Lululemon leggings pre-pandemic, intra-pandemic, post-pandemic. Like, there's things that people want. So I think what it's going to return to is a very important. I think the retail CFO is never going to matter more than they'll matter next year. I think that navigating the supply chain, because remember, the supply chain isn't shut down, it's slowed down. So this inventory is moving across, and it seems like it's less an issue of creation and more an issue of transportation. So as we manage that inventory, I think that's going to be the most important job of a retailer next year, is maintaining the benefit you got through COVID.
Shepard Smith here. Thanks for watching CNBC on YouTube.